My name's Mike Sullivan. I'm a former IRS agent. I was a teaching instructor with IRS. I've been doing this work since 1973, and I'm one of the tax experts in the United States. I have a professional Facebook following of 2,500 people. I've been on Fox Business News, ABC, and some other major stations. My YouTubes are short and they're sweet, and I want to give you what you need, not hearing a lot of fluff and crap. I try to answer every single question that you ask me, really get back with you. I can represent you if you need to, but my goal here today is to give you the information, in fact, that you need, the important information without a lot of fluff. I've worked so many of these cases, and I like to cut through everything. More than anything, I want to kind of pull that curtain back of IRS and give you the insider information you need to go ahead and resolve your case. There's many do-it-yourselfers on YouTube. Sometimes you can go ahead and resolve your case depending on the dollar amount and the complications. Some of you don't have the money. I'll at least try to answer your question. But for the people who need representation, I'm here to give you good, solid representation. Today, I want to talk to you about 5 different ways to get rid of your IRS tax debt. First of all, you can file a bankruptcy at Chapter 7 and get rid of your tax debt in certain situations. If the taxes are 3 years or older, they've been filed for 2 years, and they've been assessed for 240 days, you can go ahead and liquidate your tax debt by getting the advice of a bankruptcy attorney. There's a lot of good bankruptcy attorneys out there. They don't cost a lot to file a Chapter 7. That's one way. The downside of that, it stays on your credit report a long time. I really don't advise that, but it is an option. The second way is by statute of limitations. The IRS statute of limitations is 10 years from the date of the assessment, and you need to pull a transcript up to make sure your date of assessment has not been extended. We do that as a routine service here, but if there's a federal tax lien on that, the lien goes away when the statute's expired. So it's 10 years from the IRS actually put their debt on their computer. It's called a 150 code. You'll find that on a transcript. The most common 3 ways are through hardship. IRS will look at your financial statement, a 433F or a 433A, and they'll say, this person doesn't have a lot. And, to be honest with you, we're looking at their income and their expenses, and they're living within the expenses that we want. So we're going to put them into currently non-collectible. What hardship or currently non-collectible means is they're going to go ahead and write your case off for a couple years. Then they're going to bring that case back out to the field to go ahead and review it really at a later time. During that time period, you want to adjust your W-4 so IRS doesn't take your refund. Make sure during this period of time you file all your returns, or they're going to kick the case back out to the field, and you want to make sure you stay current in the year you're in with W-2s and stuff, or estimate payments. The next way is through a part pay agreement. You really want to get the debt taken care of. You can call us or try to go online and get a payment agreement yourself. IRS has a different type of payment agreement, but every situation and every financial situation kind of has their own little thing that they want to do. So some of you may want it, some of you may not. The last way is the offer and compromise, or the IRS tax debt settlement program. I used to teach the offer and compromise program at Internal Revenue Service. The offer and compromise, they're very picky. They accept about 21,000 offers of all the offers that go in the United States, and 21,000 people made their way through getting an IRS tax settlement. IRS is going to look at 2 things for an offer and compromise. You cannot file and get your offer accepted if you don't if IRS finds the value of your total estate, equity in a house, cars, bank account, pensions. If that's 100,000, IRS isn't going to accept any less than 100,000. So that knocks a lot of people out. So they want the liquidation value of your assets. And lastly, they want to know you're living within your means. IRS is going to take a financial statement, and they are going to go ahead and make sure that if you're making $4,000 a month, that you've lived within the IRS standard of that 4,000. IRS has a national standard program, and they dictate to you what you can spend for food and clothing, what you can spend for housing and utilities, what you can spend for a car payment, and what you can spend for your auto expenses. So they really keep tight standards. If I looked at your 433A within, 10 seconds, I can tell you if IRS is going to settle your debt or not. So for your do-it-yourselfers, you want to do a offer, file it yourself, 433 OIC, and a 656, get those forms in the IRS. If you have larger debt, don't even take this on yourself. You'll probably never get that through unless you speak to a tax professional. I hope the information I gave you was helpful. You can always call me, send me an email. If you have questions, you leave them. I try to get back with you and at least let you know if you're on the right track. Thank you for listening, and blessings.